you won't stop losing money to the Forex market. You know why? Because you won't stop watching videos that does not really matter to you. I know a lot of people are going to skip this video because the title was not like how I flipped $5 to $1,000 in 7 hours. I know people like to watch videos like this, but I wonder why people leave the most significant thing about trading. And what they want to watch is other people's success. But this doesn't help because despite how much videos you've watched on how people flip their account, you are still not profitable yet, okay? Now, the major thing that hits people out of the market is when you lose your money to the Forex market. And I promise you, a lot of people will lose their money to the Forex market, will blew their account. The Lord just blew their account with a single trade, okay? This happened in a kind of consistent manner, okay? So basically, there's something we call psychology. And psychology is exactly what's going to make you lose your money in Forex market. Okay, before we dive in to the main topic of this video, if you're viewing my video for the first time, make sure you hit right on that subscribe button because that helped me when I was still a beginner trader. When I watch a video and I see the importance of that video, what I basically do is hit on that subscribe button because I want to keep watching what that particular person is saying. Alright, don't also forget to give this video a thumb up and share with friends. Now, the major thing I want to talk about that brings in psychology in Forex trading is when you lose money. So how do you stop losing money? Because most people, they lose money consistently before they blew their account. When you have an account of $1,000 and you lose $200, what comes to your mind is you want to get this $200 back. And most of the time, a lot of people feel like, okay, let me risk it all, okay? If it comes out, fine. If it doesn't come out, fine. But more than 90% of the time, it always do not come out fine. You need to understand that the Forex market is not basically designed for you to just come and pick money. It requires you to have the skill because you are dealing with gurus, with billionaires, all right? So the major thing I want us to talk about now is risk management, okay? Risk management is a very vital part of Forex trading that can never be overemphasized because when you lose part of your money, psychology comes in and you lose it all. Then you're losing it because you did not have proper risk management. So follow me as I explain these 3 checklists for you. Number 1 is what is risk management. And number 2 is the importance of risk management. And lastly, how do you manage your risks? I intentionally made the most important one the last one because most people listen to the most important thing and forget about the other ones, which you also need to learn all of it so that you can always understand it better. So make sure you stay to the end of this video. Now, in a short form, risk management is an habit that you develop for you to help you secure what you have in your possession, all right? It might not be money, it might be anything in your possession, all right? So what risk management properly does is it helps you to manage whatever is in your possession, all right? So let's put this in a real life scenario. Let's assume you have $1,000 in your pocket and you know definitely that you have a lot of things to do. Maybe you have to pay bills, you need to pay for house rent, okay? And now you want to go out to have some fun, okay? What comes to your mind that tells you that, okay, you want to have fun, but don't spend more than $50 because you have enough bill to pay, okay? So what comes to your mind is risk management. So basically, you do risk management day to day in your life, and that's what keeps you living. But you need to implement this in the Forex market. Then secondly, what is the importance of risk management? I always like to put things in a real life scenario so I can understand exactly what I'm trying to pass to you. Let's assume you have a car and you want to go out, okay? Now, the gas that's going to accommodate you to go out from your destination to where you want to go, okay? Let's assume it's going to cost you like $200 of gas for you to, get to where you want to go, all right? And then you think of it that, okay, if you want to use the public bus, it's going to cost you just $20, all right? Now, if you come to look at it, if you go out with your car, all right, to a place that is not very important, and you spend $200 worth of gas, it doesn't make sense. But if you use the public bus just for $20, it makes sense. Now, this will help you to have enough money to buy enough gas whenever you have somewhere very important to go or you need to do something very important with your car. Now you can see that risk management is really important in our day-to-day activities. Now let's look at how can you manage your risk. And this is going to be a practical example. So make sure you hit right on that subscribe button and turn on your bell notification so that you can always get notified whenever I post new videos. So basically what you have to do is whenever you have a trade, you need to check in. Do you have a quality trade or you just want to trade? All right. So if you just want to trade, you should know that, okay, that is not a quality trade. That means where you are going to is not very important. Okay. So if you have $1,000 in your account, you see a non-quality trade, you need to risk low. Let's assume we just risk like $5. Okay. Non-quality trades. It makes sense, right? But when you see quality trades, sometimes I risk up to $100 if I have $1,000 account to go for quality trades because I can see the qualitativeness. So sometimes it doesn't work when some people will tell you that, okay, always risk 1% of your account. No, pro traders don't trade that way. You check your trade properly. You want to know if you have a quality trade or not. If you have a quality trade, you risk wisely. If you have non-quality trade, you're just going to risk less because you know you are really risking what does not really make sense. So one of the techniques that I use whenever I want to take a trade is most times when I look at my trade, let's assume gold is in 23.34. Now I want you to sell from 23.34 to 23.36, okay? Now why am I wanting you to sell from 23.34 to 23.36? Because I'm also assuming that the market might go up before coming back to the downside. So sometimes it is very hard for you because you see trades and you just want to take it. So sometimes if it's very hard for you to overcome waiting for it to reach the highest peak you think it's going to reach, okay, you go with a very small lot size from where you are, okay? Just from this place, you go with a very small lot size. Then when the markets reach the particular level you assume it's to reach, okay, then you go with a higher lot size. So if you keep doing this practically, check for your trade. Make sure you trade quality trade with meaningful risk, and make sure you take non-quality trade with what you can lose at any time. So if you can do this consistently, I promise you, it's going to help you to properly manage your risk. And if you have any question at all, you can use the comment section to let me know. If you have anything you want me to talk about in Forex trading, make sure you use the comment section to let me know. I'll see you guys in my next video. Cheers.